Hello, I am Charles Musgrove, host of the Answers That Count podcast. Welcome back for another great show. You know what we do. We try to bring information to help you run your business, to operate your business, and today's going to be no exception. We've got great content for you today. But before we get started, do me a favor, hit the subscribe button. Also hit the like button and leave us some comments. We're going to have great content in today's show, so leave us some comments, questions, and we'll get back to you on those comments that you leave us or questions that you leave us. So thank you for doing that. I appreciate you participating and subscribing. And today we have Brett Beamer. He's joining us. He is a nonprofit expert and he's a partner with Seaton Hill. Brett, thank you for joining us.
Thank you, Charles. I'm looking forward to our time together.
This is going to be a great show. And Seaton Hill, I know a lot of you've heard of who Seaton Hill is. Well, Seaton Hill Partners, they're actually sponsoring today's show also. And Seaton Hill Partners, they're one of the fastest growing strategic CFO firms in the nation. Yeah, they're nationwide now. So Brett, how many states or cities are they located in now?
We're currently in 17 cities and we have 50 partners currently. And by the end of the year, we expect to have over 100.
Wow. So they've got 100 partners. So these are 100 partners, qualified, very experienced CFO level people that are stationed throughout the United States to help businesses that need special assistance with their finances, with their accounting, with just the strategy of running their business, really a business partner for the business. So we're so glad to have partners from Seaton Hill record on our podcast. It adds a lot of great value to the podcast that we present to the viewing audience. So Brett, thank you for joining us. And today we're going to be talking about nonprofits. So nonprofits, you know, there's a lot of nonprofits out there in the cities and the states, and nonprofits are really, they have many purposes, and there's many issues to deal with nonprofits. So Brett, I guess overall, give us an idea of the experience that you have in the nonprofit arena.
Well, one, I've worked as a board member on a lot of smaller nonprofits. Some of them are churches. I've worked as treasurer for a lot of churches, and I've worked on some other boards as a member. I've also worked with nonprofits as a CFO staff member, both 501c3s and 501c6, which are associations. But a lot of the rules and problems for nonprofits expand all 26 different types of nonprofits that are out there.
It's 26 different types. So, you know, you always hear when people talk about nonprofits, they throw out the C3, C6. So associations, those are like trade associations. So those are 501c6s, right?
Correct.
So what would, just for the audience's general knowledge, what is a foundation? Give us an example of a foundation, and what number is that?
I wish I knew the number because I don't have all 26 numbers memorized. But what I do know is that like a college foundation is separate than some of your other foundations. And we will deal with some of the issues related to foundations later because they do have some unique issues and problems that they have to deal with. And they will come up in some of the examples. You're also looking at credit unions, two of the non-26 types of state authorized credit unions versus federal credit unions. And so those are two of the different ones. A lot of your universities that are nonprofit have their own. So as you go through it, there are a lot of different nonprofits out there that greatly affect our lives that we don't even think of sometimes as a nonprofit.
So to get a nonprofit, you know, there's people talk about nonprofits. We're having this podcast on nonprofits. The nonprofit status or classification, that's really done by the Internal Revenue Service. They're the ones that give you kind of the stamp of approval. Yes, you're qualified. Your application is approved for this type of nonprofit status. Is that right?
That is correct. You do have to file with the IRS, and there's a specific form and a lot of backup that goes into it, including just like for-profit organization, who the organizer is, what your original bylaws are, who the board is if you have a board present. A lot of the process is the same, but there is a specific form you have to file with the IRS. Some states require that you also file with them differently because if you're a nonprofit corporation, you also have to be in most states registered with the state as a nonprofit corporation. You can't be for-profit at the state level and nonprofit with the IRS for tax purposes.
Right.
You got to be consistent across your filings, and you need to make sure you're following the state regs where you're registering to be a nonprofit as well as the IRS.
Right.
filing.
So what's happening in that situation is you get the the advantage of qualifying yourself as a nonprofit, so you get tax advantages with that. That's one of the reasons that businesses, they apply for that tax status of not having their activity related to that nonprofit business being taxed. So as part of that, there's also some more, I guess you would say, regulatory or compliance requirements related to the nonprofit. So the IRS, what they look at on their tax returns that they require for the nonprofits is typically can be a little more rigorous, where they're looking for more disclosure type information.
That is true. And it's funny because I just read an article on this the other day that was talking about when nonprofits first started, their pages was 2 pages. The return now is like 50 million pages, and they ask questions on everything under the sun, and they ask what type it is. So it's become very, very complicated. And yet a mistake on that filing with a question being answered not correctly, or without it being documented why the answer is not what is expected, could cost a nonprofit their nonprofit status. Where tax filings for for-profit corporations have been 4 pages and moved to 5. Now they have other schedules depending on what they're doing, but the actual initial return is now up to 5 pages. And I think you can't get out of a nonprofit at under 12 pages.
Yeah.
So there's a huge difference.
There is a huge difference. And a lot of times from what I've seen on those nonprofit tax returns, it's the disclosure. The numbers are basically the same, and they're looking for the same basic generic information for the tax return, but there's a lot of disclosure requirements that's more rigorous on those nonprofit returns. And again, the purpose of that is to make sure that they retain, that they're in business, they're collecting money based on that it matches up with what their application was when they were originally granted nonprofit status.
That is correct, and to make sure that they're not doing transactions that might have a taxable party on the other side, because they ask questions on donations and what those donations are, and trying to see if there are gains in those donations. They also ask all sorts of detailed questions about people's salary and their compensation, to make sure that the nonprofit is not trying to make a profit for an individual.
Right.
It's supposed to be working on the purpose for what it said. And then there's questions that are specific to certain things, because there are some nonprofits that are politically active. Well, that politically active stuff is usually taxable, so they want to know how much of the nonprofit is doing business on the for-profit side. And nowadays, there are a lot of nonprofits that have side businesses in them that are fully taxable, even though it's under the head of the nonprofit. And so they're asking questions to make sure you're not doing something that is taxable, and just because you're a nonprofit, you're not paying the taxes. They want to make sure if it's taxable, they are collecting the taxes they're supposed to.
Absolutely. And this discussion that we've had so far really emphasizes that a nonprofit, although it may sound innocent and non-complicated, those nonprofit entities, a lot of times what the reporting requirements are and what the actual requirements that the business has to comply with, they can be more complex than a for-profit business. So it really emphasizes the need to make sure that you have qualified professionals as part of your management team, as well as the board members. And that kind of leads into another important topic I wanted to talk with you about, Brett, and that's the fiduciary responsibility of the board members. The board plays an important part of most nonprofits. So let's kind of dive into that subject of the fiduciary responsibility of the board members.
And I think it's a topic that I love talking on, because it's something that quite often no one in the nonprofit world actually understands, the fiduciary responsibility that the board has. A lot of times people get their friends and people that they think are well known in the business community to join their board. But the reality is there's been a lot of cases over the last 5-6 years where boards have been sued by stakeholders that the board may not even realize were stakeholders, for basically not doing their job, which is overlooking, and we'll talk a lot about what the jobs are later, but the fiduciary responsibility to making sure the organization is doing what it's supposed to be doing, that the board members are truly independent of the organization, and that they are working for the good of what the nonprofit mission is, not necessarily the good of someone who works for the nonprofit.
Yeah, I think that's so true. And you really don't want to have the situation where you got a a long list of board members that they're part of the board just so that they get their name on the letterhead, and they're really not active in and discharging their fiduciary responsibility. I think that's a bad situation. That's a bad scenario, but it happens. I've seen it happen in many nonprofit organizations, and it really can spell disaster for that organization if those board members are not taking their responsibilities seriously.
Well, then that's true. And we've seen some court cases, as I said, where boards have lost and people hope that their D&O insurance covers it. But in a lot of these cases, under the current rulings, people's boards go, we're a small organization. We only need $1 million of coverage. Well, when the board members are listed under that lawsuit and they're losing $5 or $10 million, a lot of nonprofits don't have $5 or $10 million to cover. So they're going after board members' deep pockets to try to pay off that $5 or $10 million. And some board members don't have a lot of money, but some do. And I'd hate to be sitting there to get my name on the letterhead to find out that my law firm is now coughing up $3 million because we weren't actively involved.
Right. What are the, if you look at if you're on a board, you want to make sure that the board consists of the right people. And the right people is not just based on personality, but it's based on the skill set, the training, the experience, the education of the members. So what are some of the top 3 or 4 people or professions or types of people that you want to see on that board?
Well, first and foremost, if you can find one who, especially if they have an interest in what you are, because sometimes they want to be paid. Attorneys are invaluable on board because the one thing an attorney will do will be provide independent thinking. As board members really need to be independent from the staff, an attorney will provide that independent thought process, will also help with basic legal questions and save you some money on attorney fees. If you find one that interest is the same as yours, you got someone who's probably going to also help give to the organization. Attorneys are invaluable. It's just a matter of finding the right attorney to join your board. But every board I've ever worked on could always benefit from having an attorney.
Yeah, I totally agree with that. So what would be the next profession that you'd want on there?
Next one would be some sort of accountant, CPA, business professional who can read financial statements and understands how to deal with auditors. One of the biggest areas where nonprofit boards recently have fallen in problems with their fiduciary duty is not having an audit committee, not necessarily having a finance committee, not looking at making sure that the finances are kept correctly and independently. Instead, they kind of not like the finances, we get told what they are by our staff and we're good to go. And that doesn't really work because, as we'll see later, there are a lot of issues that show up that staff won't even ever talk about. And you need someone who can talk with the auditors, understand the financial system, and make sure you have things in place.
Yeah, I totally agree with that. And of course, I'm a CPA, so I'm going to be biased to say that you need to have a CPA on that board. But I've seen situations where that level of profession was not on the board, and it's really a gap that oftentimes is hard to overcome. So, what are some of the duties, kind of the basic duties that board should undertake? What are the responsibilities that it has, kind of first and foremost?
First and foremost, and we'll go back to that CPA, is they need to have an audit committee if they have an audit. And most should have an audit of some sort. Even if they're small, they can usually find a CPA firm that'll do the audit at a cost that they can perform, because if it's small, they don't have to do a lot of testing. So there's not a whole lot of risk involved. They need to have someone that's like a CPA or an accountant who can understand what's going on at the audit committee and to make sure that they're following in compliance. They also need to be responsible for hiring the senior executive. Far too often, nonprofit boards feel like they're being appointed by the senior executive to the board and feel like they're beholden to that senior executive. But in reality, it's the exact opposite, where the board is really the manager for the senior executive. So even if the senior executive is the one to get you into the pipeline to get onto the board, once you're on the board, you need to turn over from, quote, I'm not the friend of that person anymore, to I'm the manager of that person, and making sure they're overseeing the senior executive. More boards have run into problems by not doing that than you can imagine. It just happens over and over and over again, where the senior executive is looking like they're the one in charge, and they're not. They also need all policies actually should be board approved. They should not be CEO approved or senior executive, the executive director approved. Now that person should be the one bringing them to the board, so they should agree with what's being presented.
Right.
But it should not be made a policy till the board goes through, yeah, we agree with this, and we believe that this is fulfilling our mission. And of course, the other most important thing that boards have to do, which sometimes executive directors don't care about, is the long-term fulfillment of its mission. Board needs to look at the mission being fulfilled, and if it can't be fulfilled, that it maintains itself as an ongoing mission. Sometimes the senior executive is looking to leave in 2 or 3 years, and they don't care where the organization is in 5 years. They start looking at how much money can I get out of the organization before I retire or go on. Where the board should be going, our job is to feed the homeless in the community. How can we make that something that always is happening so that the people we're trying to serve are able to eat?
Yeah, and exactly right. And they also, that board has a responsibility to, as you said, understand the finances, what's happened, and also approve what's budgeted for the future. So it kind of connects what's happening, the functions and the responsibilities of the nonprofit, as well as how are monies being allocated to be spent and to be received in the future. All that's a responsibility of that board for the nonprofit. So, you kind of went into some of the items I would call strategic planning. Is there a role of the board for strategic planning?
Without question. In fact, the board should be approving the strategic plan. I mean, there is no strategic plan that is ever put in place in a nonprofit that the board has not said that, yes, this is what we are about. The board is responsible really for trying to make sure that the organization is fulfilling its goal and its mission. And if at some point that mission needs to change, then it's the board's job to change that mission. And that sometimes happens, like the March of Dimes. Its original mission was to get rid of polio. Well, polio has been eliminated. The March of Dimes didn't go away. They just changed their mission to solve other issues in the medical field, and they've continued on with working in that area very successfully. So the long-term strategic goals are always on the board.
Right. So what may have, and I'm not familiar with the March of Dimes scenario, but what may also be required if the mission changes or the strategy changes enough, they have to go back to the governing documents or that application to see what was filed with the IRS for their original approval as a nonprofit, to see if that needs to be amended and the IRS grant that approval or that change. So I don't know if that was the case for the March of Dimes, but that's definitely possible and within the purview of what the board should be directing the staff and the executive team to accomplish.
And that's one reason why you want to make sure you get someone who's dealt with nonprofits, because you really want the purpose in your filing to be as broad as possible, so that if your mission statement changes, which happens in bylaw documents, it doesn't require a new filing. If you set your mission up to remove polio, but when you file with the IRS, we're here to support the medical industry in resolving medical issues, that's a pretty broad mission, and therefore you could change your mission statement in your mission as the board while still maintaining what you've done within the IRS.
Exactly.
And the best way of doing that is actually creating business plans, just like for profit businesses do, to meet your goals and targets. Come up with a 3-year business plan, have a 5-year business plan, and even if you can manage, get a 10-year business plan. If you're big enough, it's great knowing what the benchmarks are for 3, 5, and 10 years and monitoring them, making sure you're accomplishing what's there. When those plans come forward for you to approve, they've been written by the staff, so the staff is feeling like they can get there, unless there's something like COVID that hits, which may throw a dampener. But other than that, they're telling you what they expect to accomplish. You're reviewing it and saying, yeah, this is where we think we should be going, or saying, no, we think 3 years we should be doing this instead to meet our mission, and send it back.
So another, and you kind of touched on this, but when you get executive director, sooner or later they're gonna go to another job, they're gonna retire. So I would think the board is involved in the succession planning to make sure that they have a plan in place in case the executive director moves on unexpectedly, or whether there is a planned retirement or phase out or change for those executive directors.
That is true, and looking at it, the board's responsibility is on the high level. The day-to-day responsibility is on the lower level. I mean, and depending on the size of the nonprofit, if it's a small nonprofit, your CEO is probably making every real decision that is going on in that business. When you go to a medium-sized business, and I think here where we're looking at succession planning, this becomes more of an important issue, not just on their retirement, because hopefully they're working through that. But when you're a medium-sized business, You need a CEO who makes the big strategic decisions with the board, but lets a lot of the new executives that have joined make the day-to-day operational decisions. Well, that takes a different type of leader. And a lot of nonprofits start crossing over those benchmarks from small to medium, but they don't make a change in the leadership, and then they wonder why they fail. We were great as a small nonprofit. We went to medium size, and when we went to medium size, we failed. Or when they go to large, where your CEO is more of a figurehead and really doesn't make even a lot of the strategic decisions, works with the board, but so do the senior executives work with the board. And a lot of your strategic decisions are now being made by those executives, and the day-to-day decisions are actually being made by managers. Your CEO has gone from doing everything to doing some things to now really doing nothing but coaching 4 or 5 other individuals and being the face of the organization. You need different people, so you need to have succession planning, not only for when people leave, which is very important, looking out for when that happens, but also looking for where your organization is going to be. If you've moved to a different plateau for 5 years from now, you need to make sure you're planning for that right leader to be in place. It's not bad to say we want to keep the one we have, but then you need to start spending time training them to see if they can be trained out of where they are. Because if you want to keep them, then you're going to have to train them.
Right. Yeah, that's exactly right.
And part of that is important as well, is looking at developing the staff as well. If you want to make sure your staff is going to continue on in succession, you need to make sure you're spending and investing time training your staff so that they get better and better. So they may be low-level staff now when we were small, but then they moved eventually at the large level. They're a manager staff because they understand all the low-level details below them. Well, you're going to have to spend time training that person to go on. Many nonprofits will say they don't have any time whatsoever for training, and it's a shame because training staff is critical. From the executive director being trained all the way down to the newest employee who may be working the front desk as receptionist. Everyone needs some sort of training. It's important for them to be able to develop, but it's also important for them to see that you're investing in them and care about them. And since nonprofits are notorious not paying as much as for-profits, even though they should, but they're notorious for not, you need to spend money other ways of making those people feel like they're making a difference. Because if you act like it doesn't matter who's working that position, then ultimately you're going to have trouble keeping people, and that's going to hurt the organization more.
Yeah, I think that's so true, and it really goes back to the importance of that board and having board members that are business savvy, and they cover the different components of running a business. So you've got the legal parts, you've got the accounting, the financial part. You may want to even consider a banker, and what we're touching on now is actually an HR professional.
Mm-hmm.
So, you know, if your board members make up those different categories of what the business segments are, it really equips the board to have that nonprofit on the best footing possible. And we're not saying that the board members have to do the execution on training and the hands-on stuff, but they have to make sure that the plans are in place, that the plans are being executed, and follow through is happening, so that that nonprofit is well protected and well positioned to be a long-term entity and a long-term business concern.
And that goes over to even training for the board, for them to understand that this is what the board does. Is we are looking at these things. Far too many boards in the nonprofit world have their board meetings, but don't get any training whatsoever. They don't actually do any planning for when the chairman is not going to be chairman anymore. A lot of nonprofit boards have time limits on how long you can be chairman, but they really don't work on bringing the other chairman along. It's not like, well, we think so-and-so would make a great chairman. We'll now have them shadow the chairman the last year of the chairman's thing. Instead, they do the exact opposite. They promote the new chairman and then say, okay, we'll have the old chairman kind of work with them. Well, at that point, the old chairman can't say, you know, so-and-so is a bonehead and we really need to rethink who's coming next. Maybe we need to change that. You really want to know that before the chairman comes in, not after he's there to find out, oh, we made a mistake. And so if you have plans on how you're going to have future chairman, have them work before they become chairman to make sure that it looks like they're going to be a good fit. You know, other important positions are secretary and treasurer. A lot of times it's like, who's willing to do this? It should not be done that way. They should look to have a succession plan in place for those people as well. So you don't have a secretary who doesn't understand all their jobs and duties when they volunteer for it, and something gets lost in the translation. It's amazing how much board activity really is lost.
That's true. So, you know, we've touched on a lot, and I know we're running out of time right now, but did we leave anything out of the subject that's near and dear to your heart, and that's accounting and compliance?
You have, it really is one of the near and dearest to my heart. Too many nonprofit entities hire accountants out of the for-profit world who don't understand the intricacies of not-for-profit accounting. Most entries that deal with gifts go through either temporarily restricted or permanently restricted accounts. And they don't, if it's a for-profit account, they don't understand segregating everything from not out of the for-profit. So if someone gives you a donation of $100 million to do permanently, but you can take the earnings from that to feed the poor because that's your main purpose, then you have a permanently restricted environment there. You have temporarily restricted because that money can only be spent for the poor. And then it goes into unrestricted when you actually spend it. So it fits through all three stages. Someone who's from the for-profit world is, we got money in and I got $100 million revenue and I get all this other revenue and there's no restrictions on it. You won't pass an audit with that. It used to be easy to see that stuff. Audits have changed how they're reported, but you still got to maintain those separations. And it's very, very important, especially for foundations and endowments.
Right. So that goes back to what we said earlier, that the compliance and the reporting requirements for nonprofits are very they're strict, and they can be more complex than they can for the for-profit entities. And this is another example of that you just brought up with the fund accounting and the different funds, restricted, non-restricted. So that kind of puts an exclamation point on get qualified, get professional people to run your organization and to help you manage that, and also to be on the boards. The board responsibility is critical for to have an effectively run nonprofit organization.
That is correct, sir.
Outstanding content that we've covered today, and Brett Beamer, partner with Seaton Hill, I want to thank you for providing excellent content related to nonprofit organizations. It's been very good, very helpful, and I think something that those nonprofits out there that are watching this are going to get a lot of valuable information from this. So thank you for joining us, Brett.
Thank you, Charles, and thank you for all you do in our community, because you've done a lot for the Tallahassee community over the years.
I appreciate it, and you've been watching Answers That Count. I'm your host, Charles Musgrove. Thank you for joining us. Hit the subscribe button. We'll see you next time on Answers That Count. Peace.